Diversification. This word has been a buzzword in recent months, but where should we diversify into? From Europe to Asia and beyond, and across different asset classes. The next panel will provide insights into where growth and investment opportunities can be found. The session will be partially conducted in Putonghua. You may use the headset in front of you for English simultaneous interpretation. Let us now put our hands together to welcome our moderator, Bonnie Chan from Hong Kong Stock Exchange, and our panelists, Valérie Baudson from Amundi, Ronald from State Street, and Zhang from Bank of China. Bonnie, over to you. Thank you.
Thank you, and good morning to everyone. I'm sure everyone has been enjoying the summit so far. And this panel is about diversification from Europe to Asia and beyond. And diversification is a word that we've heard a lot of this morning. In fact, I think it's prominently featured in quite a number of preceding panels. And of course, we have seen a significant reallocation of global capital this year as investors respond to many things, right? From the geopolitical side of things to macro volatility, and also as we see increasing growth and risk management opportunities. So as the world seek for this new equilibrium, shall we say, I think we should just expect this trend of diversification to continue. So I think for this panel, we really want to look into what it means for the different geographical areas. And I have to say, Hong Kong has benefited from it. I mean, you've all heard about how the Hong Kong market has fared this year. It's very refreshing to be referred to as the tip of the spear as opposed to the relic of an international financial center. That unfortunately was a label put on Hong Kong a few years ago. So we're very fortunate today with this panel. And so without further ado, let's get started. And I would like to start with Valérie. So Valérie, we are seeing opportunities arising from the EU's competitiveness agenda. And I think similar to the Hong Kong market, quite a number of European markets have also done very well. The DAX have improved more than 20% year to date. So can you help us understand this? Whether you are seeing, in fact, global investors pivoting more towards European assets, and what does it mean for a firm like yours, Amundi?
Well, thank you very much, Bonnie. Good morning to everyone. Yeah, let me start maybe by drawing very quickly the European political and economic agenda to answer your question. There have been a few initiatives, 3 of them mainly, over the past few months, which I think are very interesting for Europe and we should attract worldwide investors. The first one is the launch of the Savings and Investment Union. The idea here was to make sure that the abundant savings of European citizens can be channeled very directly and very clearly towards long-term investment in order to speed up the competitiveness of Europe and European industry and economy. The second one, of course, is around defense. You may have heard about it. EU increased its financial commitment by multiplying by 5 the budget in the European Competitiveness Fund, the defense budget. And as you probably know, we also have European countries which we committed to invest 5% of their budget in defense by 35. So this will obviously increase the valuation and the dynamic of defense companies in Europe. And last but not least, Germany, which was known for its very strict fiscal orthodoxy, has launched an ambition, a multi-year plan to invest in infrastructures. So I think all these three initiatives are going to be very good for the economy in the short term, and will be, I would say, speeding up the valuations of some company. And if I may add, two more structural reforms which are being handled on the financial area. The first one is around pensions in Europe, which is transforming everywhere. You know that the population is aging worldwide. It's specifically true in Europe, and the pension system is being reformed country by country, sometimes in a different way, but all the time with a clear vision of feeding long-term investments toward Europe. And retail participation to markets as well is being very much encouraged. For all that reasons, I think we should be comfortable and positive about the future of European economy. And we have been seen already and will go on seeing investors from all over the world participating to this growth.
Thank you. So 3 initiatives and 2 structural reforms. In fact, I always tend to think about Europe in a similar fashion as Asia, because, you know, I think both regions, we see quite a lot of fragmentation over the last few years, and therefore, if there's a chance to really have all the, you know, different countries and markets within that region, you know, joining hands, that should create a much stronger momentum. So with that remark, maybe I'll turn to Mr. Zhang Hui, and I'm going to ask this question in Mandarin. So if you need translation, please do use the headphones.
Mr. Zhang, this morning, we have listened to the leadership's instruction about consumption. Can we know your view on China's ambition to build a mega-sized consumer economy to boost private consumption? How would that affect your various business sentiments regarding your bank's business, such as retail or institutional business? What kind of impact do you think it would bring? Thank you. You mentioned that China wants to be a mega-sized consumer economy. This is not only a vision, this is also what's happening right now. From statistics, we have already seen that. The first 3 quarters this year have seen a great contribution to GDP from consumption, around 53%. Up by 2.8 percentage points. And our research institute also predict that during the 15th five-year plan, that this number would increase to 60%. So it would provide a lot of driving momentum to the economic development in China. China has a great population. It consists of great potential in consumption. In the past, maybe the consumption more or less lie in the product consumption. But the next focus would be service consumption and also consumption in some new emerging areas. As you know, that China is also going through a aging transition, and there is a lack of pension service for senior citizens. We believe that in the coming 5 years, pension consumption would be around 3 billion. They have different consumption attention because the senior citizens are more willing to spend on things that they want. The young people these days, they don't buy luxury goods like my daughter, but she's very willing to spend big bucks on the sports gear. This is worth our attention as well. The consumption in China also has a very good foundation. As you know, that the GDP per capita is around 14,000 US dollars. Mid-level developed country around 20,000. So there is still a big gap. So our goal is to have higher growth of GDP per capita than the overall GDP growth. And the second part of your question is about the impact on our business. In the first 3 quarters, the individual consumption loans increased by 26%, and in the service area, 17%. And this has already exceeded the growth rate of our asset, which is around 7%. So it has provided a very good foundation for our business growth. We will protect this opportunity, and as you know that BOC is an internationalized bank, and we also want to utilize our role in 37 countries and regions. We already provide individual business and services to the greater Chinese community in 37 countries. And as we know that there are lots of convenience for foreigners visiting China. So now we have the tax refund business in the 19 provinces and autonomy districts. And these can provide great support for tourism in domestic markets. And we can also provide different kind of consumption loans and financing to guide or tap into the potential of consumption. On the supply side, we would focus on service-related consumption and new retail consumption, and we will provide financing support. So we can cover both the supply side and the demand side. On the other hand, we can provide asset management service to the individual consumers to enhance their capabilities to spend. So we will grasp that opportunity on that front. Thank you, Mr. Zhang.
This topic of consumption is an interesting one because, we were earlier talking about diversification. And, from my vantage point, when I look at my pipeline of companies waiting to get listed on the Hong Kong Stock Exchange, I would say half of them are in the new technology space. So a lot of biotechnology companies, specialist technology companies, AI, energy transitioning. But also quite prominently featured is new consumption, what we call new consumption, and the idea of intellectual property. Companies focused on really developing an equity story out of that concept is a growing part of the pipeline. So, I guess we should monitor that space. So let me now go to you, Ron, and let's maybe go back to the more traditional asset classes or things which investors generally consider as safe havens, U.S. Treasuries. Do you think that's really challenged as the ultimate and primary safe haven asset? And what do you consider as alternatives? Over to you.
Well, firstly, let me just thank the HKMA for yet another great convening. And your question, Bonnie, really is, I think, about U.S. Treasuries embedded in it. Is the U.S. still a great place to invest in or not? And certainly that bet has been a great bet for a very long time. If you think about performance, both equity and the Treasury markets, it's been a great place to be. And it's actually really hard to question that even now when you think about the performance of U.S. companies, the profit levels of U.S. companies. But it is a different moment right now. We've got this, you can call it what you like, you can call it a reordering, you can call it a deglobalization, you can call it a reglobalization, but both in trade and capital flows. Secondly, you've got a fiscal situation in many parts of the world, really driven by sovereign debt. The U.S. isn't the only one, but it's certainly in terms of the sheer volumes. We have a debt situation there. And we've seen, certainly we've seen the rates on treasuries go up. And the question then becomes, is this and when you see what's happening with the dollar, is this a de-dollarization or is this a depreciation in the dollar? And I don't think we know the answer yet. My own view is that it's going to take a long time to de-dollarize. I'm not sure it'll happen, certainly in the careers of many here. But I think that the role of the U.S. and Treasuries and the dollar has been, is being challenged now. But the point that I think you have to make is, how do you think about it going forward? It's been a great bet in the past. How do you think about it going forward? And while the U.S. administration isn't always the clearest communicator, I think what's the policy embedded by all the tactics that you're seeing is one of growth, and a belief that if sustained growth can be kept at or above the 3% level, that the debt situation actually takes care of itself. There's been an agenda here. The first, and we can disagree with it, but here's the agenda. The first has been around tariffs and this idea of let's bring manufacturing back to the US. The second thing has been about taxes. And the third has been about deregulation. The administration more or less started in that order, but now it's going on all three. And to the extent to which you believe that that can make a difference, I think the challenge for the US is that overlaying all this is an immigration policy that I think actually can be anti-growth. And if you look at the US over really almost its entire lifetime, it's been fueled by immigration. In modern times, US demography would look a lot like European demography, but for the fact of immigration. And we don't have that same level of immigration any longer. And it's not just illegal immigration that's being stopped, but legal immigration, including the kind of immigration that's really driven a lot of growth, a lot of prosperity, a lot of company formation in the US. So to me, the biggest challenge to all that we're seeing in the US will be what happens in immigration, and do we have, what kind of policy emerges from that? Right now, there's not a clear and coherent policy. So having said all that, to finally get to the answer to your question, I do think that treasuries are, it's going to take a little bit more to spur buyers of treasuries. The US is unlike Japan, where lots of government debt is basically bought internally. Most of the US government debt is bought externally, and people and investors will be seeking a yield.
Thank you. So the jury is still out whether we are seeing de-dollarization or a depreciation of the US dollars. Now, this clock is ticking rather fast. So I would like to ask a perhaps impossible question of all three of our panelists, which is, reflecting on everything that we've heard today, and the theme of this summit, tracking the shifting terrain. So just imagine you have the magic wand and you can put together a perfect investment portfolio, and let's put a time frame to it, right, for the next 12 months. What geographies, asset classes, combination are you going to put your money on? We'll start with Valérie and then on to Ron and then finally Mr. ZHANG.
Well, I think that, as you know, we have at Amundi, we are a leading European asset manager. But we are based worldwide, and most of our clients are either European or Asian. So I will answer with this important DNA that I share with our European and Asian clients. What I see is that they're all questioning their US heavy exposure today. First, they've been reassessing their aging strategies recently, considering the dollar topic we just mentioned. And when it becomes too expensive, they're really looking for diversification, which is what we really, really advise them to do. Speaking about Asia, I think that globally Asian assets are very well positioned. The valuations are globally attractive when we compare them to in a worldwide area. Of course, you need to be selective, but Asian assets for us are a must. In Europe, I think investment-grade corporate bonds are interesting, and when we speak about equity, we always look today mostly at quality business and valuation. If I had one advice to keep is to switch from a market cap weighted portfolio to a GDP weighted portfolio. I think it's the best way today to be clever in diversifying your portfolio.
Well, I like that answer because, you know, that's a little biased towards Asia. Ron, over to you.
Yeah, I'm not going to focus on geography. There's been a lot of talk here and at every conference we all go to about AI. Is there a bubble? And it really is, if you think about where all the investment is, it's in effect been about the infrastructure and the hardware. I would be highly focused on trying to figure out who are the companies that are actually going to apply it well. The application really is in its early moments here. And for good reason, because to actually do it right, one, you've got to get your data right. And that's a combination of getting your data in order and then putting the right risk and controls around it. Secondly, then, you've got to get your processes right and re-engineer those. I mean, there's no point in automating the crooked line, as they say. And then thirdly, actually then apply it. And to the extent to which you can figure out who those companies are, and there's no reason why they should be geography bound. So I think you'll see new champions emerge as a result of this. We were talking about beforehand in the session, I actually think that for all the money that's being invested in the hardware and the enablers and the infrastructure, I don't think it's going to be the same level of investment to actually apply it. And so that's what I'd be thinking about. Who will be the new champions that are going to disrupt existing industries? Some of it will be new disruptors. Some of it will be incumbents, though. They're going to figure this out quicker than their competitors.
Yeah, that's certainly what every one of us has to think about all the time recently. So finally, over to Mr. Zhang, 一个完美的投资组合。
Perfect portfolio. What are you going to allocate? I think from the banking perspective, we are more concerned about the allocation of our business in different geographies. We have all along been international. When our internal environment has been changing and globalization has also impacted on our international efforts. So I can give you some figures. You would know that right now we have a low interest rate environment and commercial banks are facing a lot of pressure. But because of our international foothold, through our overseas business in relation to the support to our revenue and also profit, there is good hedging. In terms of geographies, we will focus on Hong Kong, of course, which is our base camp. We have been deeply rooted in Hong Kong with great level of influence for many years. We will further expand our investment into our business in Hong Kong. It's my first time to come to this summit, and that has consolidated our confidence further. We are together with many financial leaders here talking about the future. This shows how vibrant Hong Kong is. BOC Hong Kong is a platform that faces the rest of the world. And a number of years ago, well, I think 8 years ago, we have started the construction of our regional headquarters. By leveraging on the Hong Kong platform, we have been radiating our business to the rest of Southeast Asia. And this region provides very good support to the BOC's operations, and the regulators have widely recognized our efforts. So for the next step, we will deepen our roots using Hong Kong as a platform to expand into more places in Southeast Asia, and then also in Central Asia, Middle East, and also Europe. These will be our important targets looking ahead. Today, we also talked about AI investment. I think we are more concerned about investment through the LLM, but we need to shift our attention to AI plus, how it supports our industries. In what areas, through effective use of AI technologies, we can create explosive growth in our industries. I think that is the right focus. Thank you.
So unfortunately, time is running out, but I'm sure that all of our guests have really enjoyed this conversation. So once again, let me thank Valérie, Ron, and ZHANG for your time and insights. Thank you very much.
Thank you.